Assalamu alaikum. Hello, welcome, and it was getting to you all who are now in front of myself. And at first, I would like to provide all types of praise for the Almighty Allah who has given me a chance to join such like a digital platform. And welcome to my session. Before launching my presentation, I would like to pronounce myself at first. And here I am Mohammad Mohammad Hussain, lecturer, Department of Accounting, Government Hussain Swiss Sonority College, Magura. And today I am going to take a session on accounting. And today's topic is adjusting entities, and it is discussed on chapter 2nd. So dear learners, so let's go to the slide for details explanation. You are watching a format, and it is a journal format. There are 5 columns that exist in a journal format. Number 1, date, name of accounts and its explanation, ledger page, debit amount and credit amount. 1, 2, 3, 4 and 5. So there are 5 columns that exist in a journal entities format. At the end of the session, the learners will understand very clearly about the classification of journal entities. Number 2, adjusting entities and the practical solution of adjusting entities that are usually come into the examination. At first, we will gather the idea about the classification of journal entities. Journal entities classified into 2 ways. Number 1, a special journal and the actual journal. A special journal also see categorized into 6 ways. Number 1, purchase entries, that means purchase journal, sales journal, purchase return journal, sales return journal, cash receipt journal, and cash payment journal. In the actual entries, there are 4 categories are in front of you. Number 1, rectifying entries. Number 2, adjusting entries. Number 3, closing entries, and number 4, opening entries. So again, I would like to recall, a special journal means purchase, sales, purchase return, sales return, cash receipt, and cash payment. In the actual journal, rectifying entries, adjusting entries, closing entries, opening entries, and others. So, it is time to know about the concept of adjusting entries, and it's required. An adjusting entries is an entry in the company's general ledger that occurs at the end of accounting period to record any unrecognized income or expenses for the period. That means adjusting journal entries can also refer to the financial record that are usually made previously in the accounting period. This is why adjusting entries are given at the end of accounting period. And we know very well the accounting period are usually made for 1 month or 3 months or 6 months, even for 1 year. That means it depends on the nature of business. It also identified by the respective business. And it is strongly required, and the adjusting entries is required because for getting the right position, that means right financial position of the company. So in a nutshell, we may say that adjusting entries is required at the end of respective accounting period for finding out or for showing the actual financial position of the company or the business. So dear learners, these adjusting entries depends on the basis of accounting period, accrual principles, revenue recognized principles, and on the basis of the matching principles. And it is also categorized into 4S. Number 1, accrual expenses or expenses payable. Accrued expenses or expenses payable. Accrued revenue or revenue receivable. And number 3, prepaid expenses. And number 4, prepaid revenue or unearned revenue. That means advanced revenue or unearned revenue. So expenses payable or revenue receivable, prepaid expenses or unearned revenue. So again, expenses payable or revenue receivable or advance expenses or advance revenue. So for 4 specific reasons, the adjusting entries are usually happen in the business or in the organization. So these 4 points we have to keep in our mind while recording any adjusting entries. So dear learners, these 4 types are adjusting entries in front of you. Now it is time to calculate in a practical situation what types of adjusting entries are usually given to your examination. It is a trial balance in front of you for as Rakuten Trading. It is prepared on 31st December 2019. And cash, it is an asset. Account receivable, also an asset. Advance rent, it is an asset. Supplies, asset. Machineries, asset. Accumulated depreciation machinery, it is a liability. Accounts payable, it is also a liability. Salaries payable, liability. Capital, also a liability. And drawings, it is a personal account. Service revenue, it is a income or revenue. Depreciation machinery, it is an expenses. Salary, it is an expenses. Rent, it is also an expenses. Utility, expenses. Supplies, expenses is an expenses. But only supplies is an asset. Am I right? Only supplies is an asset. Now look, these are the debit column and these are the credit column. Every debit will be equal to its credit. So in debit column indicates assets and expenses. Assets and expenses. In credit column indicates liabilities and capital. Liabilities and capital. So this is the trial balance in front of you. Now some adjusting entries will given for solution. So for better understanding, this is the trial balance. And now adjustment number 1. Provided service on credit. Provided service on credit 100 taka. We know very well, as it is on credit, so the cash amount will not received at present. It will be received in future. This is why account receivable is an asset. So as asset has increased, so asset will be debit. Here asset means accounts receivable. Account receivable will be debit 100, and service revenue has also increased as income has occurred. So income has increased. This is why we have to increase income by 100. So service revenue will be credit. Account receivable will be debit asset has increased, income also has increased. So asset debit, income credit, account receivable debit, service revenue credit. Number 2, depreciation charged on machinery 200 taka. We know very well, if any expenses increase, it will be debit. If any expense increase, it will be debit. So depreciation expenses will be debit 200, and we know very well accumulated depreciation is a credit item. It is a liability. If any liability increase, it will be debit. So accumulated depreciation machinery will be credit 200 taka. Adjusting entries number 3. Salary is earned by the employee of the organization, but the amount has yet not been paid by the owner. This is why, as expenses has increased, so expenses will be debit. Salary expenses will be debit 300. As the amount has yet not been paid, that means it is a liability to the company. The company has to pay in future. So liability has increased. We know very well, if any liability increase, it will be credit. So salaries payable will be credit by 300 taka. Number 4. Advance rent, not 01, it will be 31st. Okay, 31st March, that means 31st March 2019 for 12 months. That means advance rent paid on 31st March. So what amount was on the trial balance? 1200 taka. So March, that means we have to count from April, May, June, July, August, September, October, November, December. That means 9 months. Again, I would like to repeat, it is not 01, it will be 31st. Okay, so we have to count for 9 months. 1200 divided 12 equal to 100. So for 9 months will be 900 taka. So the journal entry will be rent expenses debit 900 and advance rent will be decreased. That means it is an asset, and assets has decreased by 900 taka. We know very well, if any assets come into the business will be debit, if any assets gone out from the business will be credit. So the assets 900 taka has gone out. This is why we have to credit advance rent 900 taka by 900 taka. So rent expense debit and advance rent will be credit 900 taka. Last, and number 5. On 31st December 2009, supplies balance was raised at 300 taka. So what will be the amount? What will be the adjusting entries? Okay, look. At the first moment, the supplies was 3,300. 3,300. Now the balance is raised 300. So respective 3,300 minus 300. So the respective 3,000 has been expensed. It is strongly required. You should keep in your mind, in adjusting entries we have to calculate for only expenses. So expenses will be debit and the assets will be the credit from that particular amount. So what will be the adjusting entries? Supplies expenses debit and supplies is an asset, supplies will be credit. By how much amount? 3,000. So again I would like to repeat. In front of you for better understanding. Service provided on credit 100 taka, so supplies expenses, so accounts receivable debit and service revenue credit. Depreciation charged on machinery, depreciation expenses debit, accumulated depreciation credit. Salary is earned by the employee but the amount has yet not been paid, na 300 taka, so salary expenses debit, salary payable credit. Rent, advance rent paid on 31st March 2019 for 12 months. So what will be the entries at the end of 31st December 2019? Rent expenses debit and advance rent credit. And last one, on 31st December 2019, supplies balance is rest 300. So for it, the calculation is 300 taka is an expenses. So supplies expenses debit and supplies credit. Now we have to put on the Excel sheet for better understanding what will be the practical figure in the adjusting entries in preparing the financial statements. Okay, so this is the trial balance that are given to your examination, and it is the adjusting column of a financial statement, so that from here the respective income statement and the balance sheet may prepare. Okay, now look, and these are the journal entries that we have already prepared, we have already counted from the previous slide. Account receivable debit, service revenue credit, depreciation debit, accumulated depreciation credit, salaries debit, salaries payable credit, rent expenses debit, advance rent credit, supplies debit, supplies expenses debit, supplies credit. We will put here the amount and the respective amount will be changed. Okay, so let's go to the Excel sheet. Okay. So here, how much amount? 100, am I right? 100. Okay. Account receivable debit, service revenue credit. Accounts receivable debit, and service revenue credit. Okay. Green color, we symbolize by the color green. Okay, for better understanding. Now depreciation, how much amount was there? 200. Depreciation debit, accumulated depreciation credit, 200. So depreciation expenses debit and accumulated depreciation credit. We symbolize here the black color by black color. Okay, number 3, the adjusting entry is number 3. How much amount there? 300, am I right? Okay. Okay, pink color, binjar color, am I right? The color of binjar. 300, that means salaries expenses debit and salaries payable credit. Salaries expenses debit 300, salaries payable credit 300. Okay. Entry number 4, rent expenses. How much amount? 900, am I right? 900, okay. 900, red color, we symbolize here by red color. Rent expenses debit, and advance rent credit. And last one, supplies. How much amount? Am I 300, 3000, am I right? 3000, okay. 3000. So supplies expenses debit and supplies credit. Supplies expenses debit, blue color, we symbolize here blue color. Supplies expenses debit and supplies credit. That means every debit sum of debit will be equal sum of credit. 4,500, 4,500. So every debit amount will be equal to its credit according to the rules of dual aspect principle of accounting. And from here we have to prepare adjusted trial balance, income statement and balance sheet. It is mentionable that from here on the basis of matching principle we have to extract the revenue and expenses items. We know very well matching principle indicates costs should be matched with their respective revenues for a proper determination of periodic net income, so that at the end of the accounting period we may understand how much amount of net income or net loss raised. And from here we have to extract the assets, liabilities and the owner's equity, and we may understand from the balance sheet the actual financial position of the company. So adjusting entities is very important. If any mistake is made in this case, the total figure will provide the wrong figure of revenue rather than actual. The wrong figure of masses will provide about the financial position of the company, and investors will not understand the actual situation of any organization to invest their respective monies. So adjusting entities is so important, is not possible to explain nutshell at the same time. Dear learners, I hope so you understand very clearly and sharply that I have already discussed in front of you. I am expecting that you will try your level best at your home and to make practice again and again on the text, and you will realize all the things at the same time. So thank you all for staying with Mobbot and to take our patience. Again, thank you all.